This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, while emerging market stocks slipped 0.2% today, with Hong Kong and South Korean shares weighing on the MSCI's index, cryptocurrencies fought back, retaking ground lost during a bout of weekend selling. That, of course, was fueled by further signs of a Chinese crackdown on the emerging sector. Now, Bitcoin jumped more than 10% on the day, erasing losses of 7.5% from a day earlier. It is still down by more than 40% from last month's a record high. Across emerging markets, inflation concerns remain the central theme in markets, but investors are holding out for U.S. personal consumption expenditure data, which is set to come out this week. Now, also coming up on today's show, a Safaricom-led consortium wins a license to operate a mobile network in Ethiopia. The UN's nuclear watchdog extends its agreement with Iran by a month. And the Tanzanian government promotes fish farming in rural areas. Now, a consortium led by Vodacom affiliate Safaricom has won a license to operate a mobile network in Ethiopia. It is the first such award to a private group as the country looks to open up its telecoms industry to competition. The consortium includes Vodacom Group, Vodafone Group, Sumitomo Corporation and CDC Group. Now, it won the bid by offering about $850 million. The deal is set to create up to 1.5 million new jobs and bring $8.5 billion in investment over 10 years. It is also expected to provide 4G and 5G internet services in the country. And by 2023, a low-orbit satellite will be put in place to provide nationwide 4G coverage. Well, let's find out more from Zemedene Negatu. He's global chairman of the Fairfax Africa Fund. Great to have you with us today, sir. Now, a lot has been said about the transformative effect that these new entrants into Ethiopia's telecoms market will have, not just on the telecom sector, but also on the country's economy as a whole. Now, given the monopoly that Ethio Telecom has operated for so long now, what are your thoughts on the scale of the impact that these new entrants will have on the country?
First of all, thank you for having me back on your program. As you indicated in your intro, there is going to be a new player in the marketplace in a monopoly that has been in place for 126 years. So that by itself is a dramatic transformation for the market, not just, as you indicated, for the telecom sector, but for many other sectors, from manufacturing to agro, and most importantly for the financial service sector, which needs a robust, reliable, strong telecom infrastructure. So the introduction of, as you've said, the Safaricom consortium, I think will increase not only competition, but enhance the services to customers, both corporate customers and domestic customers. I just wanted to add here that even though Telecom has been a monopoly for a long time, for the last couple of years, it's actually been preparing for competition. So you see a lot of upgraded services, reliable Wi-Fi. I'm currently talking to you from a very reliable broadband that Ethio Telecom is providing us. So they've also been preparing for this. However, when you face real competition, you have to elevate the game. So I'm confident that we'll be able to compete. Secondly, as you may be aware, in the next couple of 3 months, Ethio Telecom itself is up for privatization. 45% will be privatized, 40% for an international operator, 5% for Ethiopians. So with the strength that they've been building the last, say, couple of 3 years, combined with an international operator, I think they'll be able to compete effectively with the Safaricom consortium. And also, I just want to add something very important. The government has put out 2 licenses, but as you know, on Saturday, the Council of Ministers awarded only one, which is the Safaricom consortium, but they're retendering the second license very shortly, as they said. So you're going to be seeing 3 big competitors in a market which didn't know what competition was. And that's a huge transformational impact on the Ethiopian economy. As I said, beyond telecom, but also the nascent technology ICT sector in Ethiopia will get a big boost. And Ethiopia is also aspiring to be like Kenya. Ethiopia and the Silicon Valley version of Ethiopia now has a real viable chance of competing with the introduction of competition and global players in the marketplace.
Well, let's just delve deeper into this question of competition in the sector. Now, as you mentioned, this is a first for Ethiopia. It has largely been a monopoly. And of course, these new entrants already will not be allowed to operate the mobile phone-based financial services, which is something Safaricom is quite popular and known for. In light of this, how ready then is the country for a very competitive telecom sector? And of course, the entrance of international players, profitable companies such as Safaricom.
Very good point. I just want to clarify, emphasize a couple of points. One is mobile money. I'm sure you're aware the government decided that for now, it would not allow the international telcos to enter mobile money because they wanted to give Ethio Telecom some breathing room. But they made it very clear. In fact, just only 2 weeks ago, it was announced that a year from now, exactly a year from now, in May 2022, the consortium, the Safaricom consortium, will be allowed into mobile money. But by then, the hope by the government is the Ethio Telecom would have built up its capacity to provide mobile. And it's interesting, in just 1 week of launching its own mobile money services, Ethio Telecom announced that it signed up 1 million subscribers to the services. So their expectation is by this time next year, they would have built enough capacity to be able to compete with, I mean, essentially the inventor, the innovator of mobile money, which is Safaricom through its M-Pesa. So I think they'll be ready. And as I said, it's good for the consumer when you have diversified service providers in a country that, as I said, for 126 years, there was a state monopoly. That, I think, by itself is transformational, but the service capacity that these international companies like Safaricom will bring will also boost the confidence of the consumer, the confidence of corporate customers to use Ethiopia as their base for ICT innovation, to use Ethiopia for financial services innovation, and many other things. And these companies that are investing, I think, will help build that capacity domestically and hopefully attract both domestic and international investors to Ethiopia.
Now, as you mentioned, a new license will be awarded soon. And this, of course, is all part of Prime Minister Abiy's planned reforms in the telecom sector. So stepping back, looking at what has happened so far, what are your thoughts on that reform plan?
So the privatization, let's call it the liberalization decision to open up the market was made almost 3 years ago. And since then, as the government has announced, it took a little while, but also, of course, remember last year, COVID slowed down or shut down the world economy. But on the Ethiopian side, they continue to prepare for this process. So I would say they're on track, considering what happened globally, and of course in Africa and in Ethiopia with COVID. I would say the delay was understandable, but now they've successfully sold, at least issued one license. I want to emphasize something important as well. They actually got about $1.5 billion in offers. If they had accepted, as you know, they had two offers. One is for the Safaricom consortium, which is reportedly $850 million, and $600 million was from the MTN consortium. Combined was about $1.5 billion. That's actually a pretty good indication that these telecom operators, the new ones coming to Ethiopia, were willing to put up $1.5 billion. It's a strong indicator of the market potential of a country of 117 million people, the third largest GDP in sub-Saharan Africa, which the IMF is forecasting that in 2022, Ethiopia will be growing by about 8.1%. So this is what the investors like the Safaricom consortium were looking at. And as I said, the government receiving $1.5 billion, while still COVID is ravaging a lot of the world, for these companies to have that level of confidence speaking with their money, I think is a testament that the reform process, specifically as you asked me on the telecom sector, is gaining momentum and has actually showed one major result, like you said, like Saturday, the award of license to the Safaricom consortium.
Quite right. Well, we'll certainly continue watching that. Many thanks for your insights, Mr. Negatu. That, of course, is Zemedene Negatu. He's a global chairman of the Fairfax Africa Fund. Well, let's move on now to Egypt. The country has topped Africa for the second year running as remittance inflows rose about 11% to reach $30 billion. That's according to the latest World Bank report on remittances in 2020. Now, Nigeria was ranked second, although it recorded a drop in remittances by 28%. From Cairo, here's CGTN's Yasser Hakim examining the reasons behind Egypt's remittance growth and its significance for the country's economy.
Atif Nassar is an engineer who receives monthly transfers from his relatives in the United Arab Emirates and Saudi Arabia. Part of the proceeds he uses for personal expenses and the rest for investments.
The investment is mainly in real estate for myself and others. I buy and sell land or apartments, which is better because putting money in the bank, dollars or Egyptian pounds, is not as profitable as investing in real estate, whether in Cairo or in the new capital.
In spite of the coronavirus pandemic, the transfers from Egyptian expatriates increased by 11% year-on-year in 2020.
The main reason for the increase in remittances, which has reached $29.6 billion, is because of the ability of Egypt's economy to remain stable and withstand the coronavirus crisis. This encouraged Egyptian expatriates to transfer their money to Egypt. Also, interest rates here are one of the highest in the world, which also encouraged them to deposit their money in Egyptian banks. And finally, the elimination of the black market.
Most of the remittances have arrived from the Gulf nations, where about 65% of Egyptian expats are living. Higher inflows have come at the right time for the North African nation's government. It has made up for the huge losses in tourism revenue, a major source of hard currency that has been affected by travel curbs imposed to halt the spread of COVID-19 pandemic. But experts fear 2021 might see a reverse in fortunes.
This year, we could see a drop in remittances because the coronavirus pandemic has affected world economies, especially oil-dependent Gulf nations, which have suffered due to low oil prices. Some have cut salaries of expatriates, and others have laid off people. So this year, we expect less money transfers, and in 2022, we might see even further drops than 2021.
In the meantime, remittances from Egyptian expatriates are giving a much-needed boost to the state budget and are helping to stimulate the local market amid the economic fallout caused by the coronavirus pandemic. Yasser Hakim for CGTN, Cairo.
And now look at our corporate headlines today. Kenya's state-owned power utility, Kenya Power, has reversed its decision to lay off an unspecified number of employees from its workforce. Now, this follows mounting pressure from the Kenya Electrical Trades and Allied Workers Union to reverse the planned job cuts. Kenya Power had hoped its initial plan will help cut costs and return the firm to profitability. And South Africa's Standard Bank plans to publish a climate strategy and targets aimed at reducing its exposure to fossil fuel assets on a timeline aligned with the Paris goals. The bank will do so as part of the group's 2021 reporting to shareholders. Now, Standard Bank was the first South African company to table climate-related resolutions back in 2019. And still in South Africa, telecom operator Telkom has reported a 53.4% rise in full-year profit for the year ending March 2021. This shows a recovery in full-year headline earnings, and it comes after revenue from its mobile business surged by 34.5% to make up the lion's share of its income. Migration to work from home led to a 25.1% decline in fixed voice revenues as active mobile subscribers rose 27.8% in the year to March. And finally, Dubai-based airline Emirates has warned Boeing that it will turn down delivery of the 777X jets if they fall short of contractual performance commitments. Now, the airline's president, Tim Clark, adds that he has not received any performance details of the jet's engine so far, even though test flights began in 2020. The Emirates order from Boeing is worth over $50 billion. And that's a look at our corporate headlines. Well, let's head into a short break now, still coming up on the show. We'll be looking at the rise of cybercrime across Africa amid the pandemic, as well as plans to get Nigeria Air in the skies come 2022.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Uche Okoronkwo. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back. Now, global demand for cryptocurrencies has grown significantly in the last year. Buyers worldwide surpassed the 100 million mark in the first quarter of this year. While growth is being recorded globally, there's also been a surge of investors across Africa. Well, CGTN Sumitra Naidu now takes a look at what's spurring this growth.
The London-based crypto exchange Luno, which has been around since 2013, gained over 1 million customers in 2020. Of its 7 million customers globally, 4.7 million are in Africa.
We've seen strong growth, more from retail customers, so individuals wanting to buy and sell cryptocurrency. And that's for different reasons. It's for whether they want to invest for the longer term, whether they want to speculate in the short term, which of course is very risky because the Bitcoin price can be very volatile, or whether they want to use Bitcoin for payments. So for various reasons, we have a very diverse group of customers. But overall, we've seen significant growth over the last 12 months or so.
So what's behind the sudden surge? Experts believe the recent interest from institutional investors has helped create credibility. New technology and infrastructure have created better access, and a company like Luno, which dominates the market in Africa, is using its platform to educate people.
Every industrial revolution, and now we're in the fourth industrial revolution where blockchain technology is the leading technology. With every industrial revolution, there will always be fear, skepticism, concern, doubt, Because it's the nature of industrial revolutions when they begin. Just make sure that you're engaged, you're getting the right knowledge, you're understanding, so that you're not left behind in the technological revolution.
Since Bitcoin first surfaced in 2009, over 1,300 different cryptocurrencies have made it onto the market. Bitcoin remains the most popular, especially in South Africa.
The market in South Africa is hot, let's put it that way. There's a number of reasons for that. People want to trade, they're excited by the opportunities of crypto, they're excited by the ability to trade in and out and try and get big gains. But another big one is South Africa has unique foreign exchange control.
Luno operates in 40 countries but has enjoyed the strongest growth in South Africa and Nigeria in the last few months. In March, South Africa recorded over 20% growth in customers registering for crypto wallets. Nigeria was almost double at around 40%. The growth has been so rapid it prompted the Central Bank of Nigeria to step on the brakes, restricting banks from crypto payments.
I think the Nigerian government, in all honesty, has been quite shocked at the uptake of Bitcoin or cryptocurrencies within Nigeria. And I think they're reacting from a point of, hold on, we don't know what's going on. Can we take a moment and find proper structures to regulate this movement of money? Because at the end of the day, it is movements of billions on a daily basis.
Soon, regulation will be implemented in South Africa, which is likely to see more take-up of cryptocurrencies. In the meantime, the market is being driven by sentiment and those that fear missing out. Sumitra Nadu, CGTN, Johannesburg, South Africa.
Well, let's stay in the digital space. Cybersecurity threats in Africa have flourished, especially after the pandemic forced a growing dependence on network technologies. And of course, consumers turn to online payments and purchases. South Africa, Nigeria and Kenya have seen the biggest increases in cybercrime, with Kaspersky Research reporting 28 million malware attacks in 2020 alone and 102 million detections of potentially unwanted programs. Now, experts are already warning the African nations that they must prepare themselves for the inevitability of increases in these attacks. Well, let's discuss the way forward with one of the world's largest payments tech firms, Visa. We are now joined by Irene Auma. She's Visa's Director of Risk Services for Sub-Saharan Africa. Great to have you with us on the show today, Irene. Now, of course, since COVID-19, what is clear is the threat of fraud, the threat of theft, which we experienced in the past in traditional spaces, that now has shifted to the digital space, of course, with the realities of the pandemic. So what sort of trends has Visa noted in terms of the rising significance of these cyber threats to the continent, especially since the pandemic started?
Thank you. Thank you for having me. And rightly, as you say, with the advent of the COVID-19 pandemic, this has forced many financial institutions and organizations to live almost what we could call a decade in a day. So everyone even those who had not considered online payments or digital commerce have now been forced to get into that space. And as businesses grow, and this brings about great opportunity for both the consumer and institution, it has also brought in great opportunity for the bad actors in the cyberspace. So we've seen quite an aggressive, steep growth in cyber attack and cyber crimes in the last 12 plus months that we've had the pandemic, especially in African footprint. So specifically speaking to what we've seen the rise of is social engineering, targeting unsuspecting consumers who most of whom previously had not even made an attempt to make purchases online, but are now going online, but are less informed and less educated in that space and are less aware of the crimes or the risks that are available in the online space. So we've seen quite an increase in social engineering, and also we've seen an increase of data breach attacks to organizations, to merchants, if you may, that are not prepared. They are in the in the online space. However, they're not equipped or they're not having a full suit that is required to protect the ecosystem from any breaches.
Quite right, because the assessment seems to be that African governments, African organizations, businesses mostly lack that capacity and cyber awareness to keep up with the rate of that threat. Do you agree with that sentiment? And certainly, how is Visa, as a global payments company, approaching that issue?
More than just saying that governments are ill-equipped, I wouldn't actually say that, because I would say, especially on the African footprints, there's been a lot of collaboration between regulatory bodies and the financial institution players to try and move fast with the same pace that the advent of technology is happening. But we must acknowledge that the speed at which we are moving on the security side is not the same speed that we are moving in the development of the solutions or product solutioning front. So yes, there must be a conscious effort, and specifically to collaborate between institutions and governments and regulatory bodies to ensure that the cyber crime challenge is addressed promptly and in a timely manner. I will say at this point that there is no one size fits all to address cybercrime. It's a continuous investigative and learning process that we must be able to have systems and tools that allows the organizations, institutions to be able to detect any anomalies, what's new in the financial communication space. So collaboration is critical, and also who are the organizations or institutions or governments partnering with, because again, we must play to our strengths. All organizations must play to their strengths, but collaborate to be able to deliver a secure and safe platform for the consumer at the end of the day.
Well, another thing experts do point to is the lack of dedicated cybersecurity strategies. So in light of this, what's your perspective on the prospects for that area and for security in Africa's digital space going forward?
Rightly put, there is definitely a great opportunity for growth and building capacity in this front, and ensuring that we actually take best practices. It's the same threat actors that were acting in a slower and traditional approach because the space was not previously flooded with opportunities. But today, the threat actors are actually moving to the space, and they are so sophisticated. This is an industry that doesn't look at costs as an issue, as most of our organizations will look at addressing risk as a cost aspect. But there has to be a focus and investment. For example, Visa does make quite a huge investments toward security threats and managing that front from a security perspective. We have full-time technology and teams that actually continuously do penetration testing and build solutions that will be able to deter or protect our network from any attack, so that at any given point, when any threat is advanced to our space, then we are able to detect it and take proactive measure to stop it from happening. The same must apply also in Africa. We must admit that we have quite a young consumer base in the African footprint, sub-Saharan Africa, who are very agile when it comes to accessing online platforms for financial services. And in that space, we must incorporate consumer protection by building a secure network and ecosystem, and being able to equip them as well from the point of education on when to identify a threat and how to communicate it back to their institutions.
Well, many thanks, Irene, for those great insights. That, of course, is Irene Auma. She's Visa's Director of Risk Services for Sub-Saharan Africa. Well, let's move on now. The Nigerian government has confirmed its new national carrier will begin operations early next year. The country's Minister of Aviation says plans to replace the liquidated Nigerian Airways have reached an advanced stage. Now, the new national carrier was meant to be launched this year, but was postponed because of the COVID-19 pandemic. Here's CGTN's Deji Badmus with more on that story.
The plan to get a new national carrier for Nigeria after the old one closed shop in 2003 has been in the works for close to 5 years now. But after several postponements of the launch date, the man who is overseeing the entire project says 2022 is the new date.
It is our intention to have the national carrier running in 2021, which is this year. Unfortunately, due to COVID, which took the greater part of last year, since March last year, activities are almost impossible. This in itself, though negatively affected civil aviation, in terms of establishment of the national carrier, it makes it much better time to establish the carrier than before. Of course, for obvious reasons, we now have access to the equipment that they will come faster to us. Deliveries of the aircraft will be faster. Perhaps even the rates might be cheaper.
Unlike its predecessor, Nigerian Airways, the new national carrier, Nigeria Air as it's been called, is expected to be mainly private sector financed and managed. The government says it only plans to hold a 5% stake in the project. The private investors are expected to raise around $250 million to start the airline, while the government provides the financial guarantees for the project.
Nigeria is the best candidate to have an airline. 200 million mobile people that travel sometimes almost for nothing. Sitting within the West African sub-region, 400 million people. Contiguous with Central Africa, 600 million people, twice the population of the US, equal to the population of the entire continental Europe. At the center of Africa, Nigeria, equal distance from all location, rising middle class, propensity to fly is high. Nigeria is the best candidate for a very robust carrier. Thank you.
As exciting as the prospect might seem, there was still skepticism over the project. Up till this moment, no private sector investor has been officially named for the airline.
What I've been seeing from the beginning of 2019 is like we are trying to set up a government carrier. If we are setting up a national carrier, we don't need all this preparation on the government side. There's too much preparation on the government side that is disturbing the thinking, the cooperation they need from the private sector. So if your own contribution is just going to be 5%, what about the people to put in the 90%? Those are the people who want to know.
The government is indeed yet to clearly spell out the details of both the financials and management of the new national carrier. And that is what has got so many aviation experts here doubting if indeed the government was not planning to put in far more than the 5% stake it is projecting. The aviation minister says the issue will be further discussed at future cabinet meetings. Perhaps maybe then things will become clearer. Deji Badmos, CGTN, Lagos, Nigeria.
You're watching Global Business Africa. We're going to take a short break now, still coming up on the show. The UN's nuclear watchdog extended its agreement with Iran by a month. And we take a look at why China is cracking down on cryptocurrencies.
This has taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. only on CGTN.
How will your world change today? What happens here? What happens there? Or what do you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
I try to not let it affect me, but there are days when it does. I'm a human being, and to see patients in a hospital bed and their family members are not there, there's no one there to hold their hand, that human touch, you know?
I just hope everyone can remember that the situation is not permanent and that everything will get better eventually.
And now here's a quick recap of today's top headlines. The World Health Organization's Director General has called for the vaccination of at least 10% of the population of each country by September. He, along with other world leaders, were speaking on day one of the 74th World Health Assembly, which opened virtually on Monday. And in Nigeria, hundreds of people protesting against kidnappings blocked a highway into the capital, Abuja. Police say despite efforts to disperse the crowd, cargo and tanker trucks were stuck in traffic for most of the day. Now, the protests were sparked by two recent incidents in Guaraka, just outside Abuja, that have reportedly seen dozens of people abducted. And the U.S. government has announced visa restrictions on Ethiopian officials over the conflict in Tigray. People on the streets of Addis Ababa have criticized the U.S., saying the decision is an attack on the sovereignty of Ethiopia. And that's a recap of today's top headlines. And now to some international news. Iran and global nuclear watchdog, the International Atomic Energy Agency, have extended a technical agreement reached in February for another month. The deal allows the watchdog to maintain its monitoring equipment at Iranian nuclear sites, but Iran will keep the tapes until the 2015 nuclear deal with world powers is restored. And of course, the United States sanctions are lifted. Now, the extension provides a vital window to negotiators in Vienna in their efforts to keep the 2015 nuclear deal alive. Meanwhile, China has recently widened its crackdown on cryptocurrencies. Authorities have in the last week banned financial institutions and payment companies from providing services related to cryptocurrency transactions. Now, they've also warned investors against speculative crypto trading. All this while the country is piloting its own digital yuan. Experts explain why this was necessary.
Under the latest ban, institutions, including banks and online payment channels, must stop offering clients any services involving cryptocurrency, such as registration, trading, and settlement. Associate Dean Zhang Xiaoyan with the PBC School of Finance at Tsinghua University says the main goal of the regulators is to lower financial risks and discourage speculative trading.
From my own research and the research of my peers, colleagues, I already know two facts. Number one is a lot of cryptocurrencies, they have been used in illegal transactions. For instance, transactions on drugs. That this kind of dark transactions should not be encouraged. I think the number is between a quarter and 1/3 of total transactions using cryptocurrencies. That's number one. And the other fact I do know from previous data and academic research is there are a lot of manipulations in this particular market. This is a new market, and the regulation has not penetrated into this market.
China is an emerging economy with small and medium-sized enterprises accounting for over 90% of its businesses and contributing more than 70% of its total GDP. These companies are especially vulnerable to the risks of cryptocurrency transactions.
We want to protect them because if they don't have the finance knowledge, their understanding of the cryptocurrency, if they're not sophisticated enough, they can easily suffer losses they don't necessarily are able to tolerate in their lives.
President Zhou Xiaochuan at the China Society for Finance and Banking also shared the same views. He says it is also one of the major reasons why China is promoting its national digital yuan, as it is backed by the central government and can ensure safe transactions. He made these remarks at the Tsinghua PBCSF Global Finance Forum on Saturday.
Quite a lot of small and medium-sized enterprises are doing international trade between countries, and sometimes even between large states. They don't know their foreign counterparts' backgrounds well and need to find a reliable bank to do these transactions. Those banks not only provide transaction services, but also help build trustworthy relations for companies from both sides. Some people complain that the process is complicated and not efficient, but the act of simply exchanging products and money is not as easy as what we imagine.
Last week, Hainan province completed the first digital yuan payment in its cross-border import e-commerce. And earlier this month, several cities in China and the Hong Kong Special Administrative Region also finished the first phase of tests using the digital yuan for cross-border payments. With the broader use of the Chinese digital yuan, Zhou explains that the purpose of issuing digital yuan is not to take the dominant position of US dollar.
Some international media have argued that no matter what, the Chinese digital yuan would not be able to replace the dominant position of the US dollar. I think that the premise of that argument is already wrong. The purpose of developing the digital yuan is to keep up with the modernization of payment systems, increase efficiency and lower costs. We did not design it to replace the US dollar.
Zhou adds that China is still at the early stage of the internationalization of the digital yuan, and he calls for more policy support.
Meanwhile, 2021 is a crucial year for China's 3-year action plan for state-owned enterprises reform. By the end of this year, the plan aims to ensure 70% of China's SOEs are turned into market-oriented enterprises. Now, Shanghai Electric, one of the most important suppliers of power generation equipment in China, is on that list. Here's CGTN's Liu Shixian with that report.
Increasing state-owned enterprises' competitiveness and transforming them into world-class enterprises is a central feature of China's economic planning. After introducing a stock incentive plan and employee shareholding, Chairman of Shanghai Electric Group says the corporation began to rapidly move forward.
Since 2018, the group's operating income and net profit has grown by more than 20% for 3 consecutive years. In 2020 especially, we have withstood the huge impact of the epidemic on production and operational activities and continue to achieve annual growth.
At present, more than 54% of central SOE subsidiaries and nearly 30% of local SOEs have external directors accounting for more than half of their boards. That's a significant increase from last year, but officials said many SOEs still lag far behind their reform targets in management.
In the recent investigation, we found that some enterprises have signed contracts with managers in form, but there are still problems such as single assessment indicators, insufficient performance targets, and a relatively high proportion of fixed salaries.
In particular, large and medium-sized state-owned enterprises should play a more supporting role in China's rapid economic recovery. And it should support small and medium-sized enterprises in restructuring their industrial chains.
刘嘉欣 CGTN 北京。
Now, green super rice, a grain variety introduced by Chinese scientists, is aiming to make farming more sustainable in Indonesia. Small farmers especially benefit from this variety because of its high yield and environmentally friendly feature. Here's CGTN Silkina Alhuwalia with more.
Climate change has been the center of discussion in Indonesia's agricultural industry. Over the years, global warming has resulted in erratic weather patterns, affecting the livelihoods of millions of farmers. To anticipate and deal with these changes, researchers have been relying on a new variety of rice founded by Chinese scientists.
Green super rice, also known as GSR, is designed to have high yields, which means farmers planting in suboptimal conditions are still able to reap its benefits because GSR can survive in extreme conditions, including unpredictable weather patterns.
It's also environmentally friendly, helping farmers to plant crops in a more natural way. Abdullah Mansur works with farmers who produces GSR in West Java, and he says the crop has drastically transformed rice farming for the better.
Farmers here prefer green super rice because of its high quality and low input. They are able to harvest nearly 8 tons by using less water and no pesticides.
Experts say this collaborative research between the Chinese and Indonesian government will have a long-term impact on Indonesia's economy.
If there are companies who can plant GSR in large quantities, Indonesia will see a significant impact on its economy. Regions such as Kalimantan and East Java are working to adopt GSR in a commercial way. This is a big potential for Indonesia's economy.
Memungkinkan untuk komersialisasi yang lebih besar.
Dozens of farmers in this West Java plantation have doubled their income since producing GSR. And soon, that could be the reality for many more farmers. The crop is already available in 7 regions across Indonesia, and the government expects production to continue to increase. Silkina Aluwalia, CGTN, West Java.
And on that note, let's take a closer look at commodity markets today. Oil prices climbing almost 2% as a potential snag emerged in reviving that 2015 Iran nuclear deal. Now, analysts say that could add more oil supply in the market going forward. But they also say the case for higher prices remains intact even with increased Iran exports. Meanwhile, gold prices climbing as well to hover near a 4.5-month high. They were supported by a weaker US dollar and growing inflationary pressure. Also, a slide in cryptocurrencies did help to lift the safe haven metals appeal today. Well, let's take a short break now. Do stay with us. Lots more for you after this.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Tunis, Cairo,
Syria,
Juba,
Johannesburg,
Ethiopia, Tanzania.
Africa Live. Find your voice.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more? To understand better. CGTN. See the difference.
Now, Tanzania's government is promoting fish farming to rural communities in order to mitigate the potential effects of climate change. It has entered into an agreement with the International Fund for Agricultural Development on a $77 million project, which will help hundreds of thousands of rural households in the country. CGTN's Isaac Lucando has more on grassroots tonight.
These fish fingerlings could be the key to mitigating the effects of climate change in Tanzania. Through fish farming, the government hopes to boost food security and nutrition for rural communities largely dependent on food production for their livelihood. Organizations like aquaculture hatcheries say the demand for fish fingerlings is high.
The demand for tilapia fingerlings is more than 30 million, but only 5 million are currently available annually. Our organisation aims to produce 2 million, which will only be about 7% of the nation's needs.
Through the Agriculture and Fisheries Development Program, fish farmers will be provided with the information and tools to improve their yields. Mkono Thomas is one of over 10,000 farmers who have ventured into fish farming in the country.
When you have centers or companies that are recognized and regulated by the government, it becomes easier to ensure that fingerlings obtained from such sources are reliable. Farmers will not be susceptible to losses.
Government statistics show that 80% of the food produced in Tanzania comes from small-scale farmers. These farmers rely on rainfall and have limited access to inputs and information that could help them improve yields.
According to the International Fund for Agricultural Development, farmers in Tanzania remain most at risk from the effects of climate change. Droughts and increased rainfall in certain parts of the country continue to pose a threat to their livelihoods.
With 31% of Tanzania's rural population living below the poverty line, the government is prioritizing the reduction of rural poverty over the next 5 years.
We aim at reducing poverty among livestock keepers and poverty among the fishing community. We are asking, where is their contribution in increasing employment?
The government hopes that the initiative will provide certainty to farmers. It hopes to enable them to put food on their tables and be resilient in the face of unpredictable climate. Isaac Lucando, CGTN, Dar es Salaam.
Now, Ghana's film industry may be far behind that of its West African neighbor Nigeria, which of course is the biggest in Africa. But the government is now looking to position the country as a film hub in the region and hopes the industry can become a key contributor to its economy. Here's CGTN's Nabil Ahmed Rufai reporting from Accra.
Action. These actors are back on set in Accra after months of break due to the coronavirus pandemic. As lockdown restrictions are eased, they now want to keep the cameras rolling, but the production of local movies in the country has been declining for years. Filmmakers say they are not making enough money from their movies.
What we need is platforms to distribute movies. We need Irocos, we need, film platforms online, those apps, because Ghana is lacking distribution.
Just make it two.
Unlike Nigeria's film industry, known as Nollywood, which contributes more than $7 billion to the country's economy every year, experts say the potential of its West African neighbor, Ghana, is untapped. They link this to a lack of investment in the industry. Now, the government is pumping $25 million in with a presidential film pitch series aimed at creating jobs for 6,000 people. 25 filmmakers have been shortlisted to benefit with funding for their productions this year.
We
we are ensuring that the right quality standards are met, that the films come with the right production values, that these are stories that are great, that can find audiences, not just in Ghana, but globally. And we have, in a way, secured a return on investment by also bringing the platforms. That is, where are you going to sell your content?
Still, some filmmakers say more needs to be done, especially when many actors are concerned about being underpaid for their services.
If there is structure, you know that this is how a dinner is supposed to be paid. This is how much you'd get. These are our royalties. These are other things that we need to benefit. But all these things are not in place. So I do believe that funding is critical. It's very important. But if you don't have good leadership, you still get the funding and you mess up.
While efforts are being made to revive Ghana's film industry, filmmakers also want copyright and piracy infringements on their movies tackled.
For upcoming actors here, the success of Ghana's film industry means much more than their quest for fame. They believe it will help them gain sustainable jobs as production of films in the country ramps up.
And they want to play a role in making Ghana's film industry a multi-million-dollar business that will also contribute significantly to the country's economy. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
And before we leave you, a quick look at Africa's currencies. South Africa's rand continues to extend gains. It passed the 18-month best, which it reached this past Friday. Now, the currency drew strength from rating agencies holding its credit rating and outlook at current levels. Meanwhile, Nigeria's naira continues to hover around 412 naira per dollar at the importers and exporters window. It did depreciate marginally at the parallel market. It closed at around 485 naira per dollar. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.